Friday the 8th of March, non-farm payroll day, so I'm not going to be going too heavy into any trade ideas because of course they could be all blown out the water by the time the number comes out at 1:30 UK time. This is the dollar index, which you can see is sort of in some sort of rising wedge or even a triangle pattern. It's a wide one. It's been really difficult to trade, I think, over the last few months because it has been just ranging. So we've tested the upper end of the range. We've tested the highs, the November, December highs in the dollar index, and we've reversed from there, which keeps us in this wedge pattern. So do we dip down to the middle of the range around the 96.50 area? It's certainly possible. Obviously, if we close the week on a strong non-farm payroll number, if we close above 97.75 or significantly, let's say significantly above there, so let's say it's at least above 97.80, that should be a strong buy signal for next week. It could indicate that we've broken out of that holding pattern. Don't forget, we are in a bull trend, or we have been at least for the last year and a bit. So there is every chance that this is a consolidation pattern, which when we break higher will then lead to significant gains in the dollar. And I'm hoping we might even have a trend that we can ride. You know, finally a breakout would really give us some decent upside, and we'd have a swing trade to actually buy into the dollar and run it, rather than this back and forth that we've had for so many months. The Aussie dollar, we were selling on a break below 90, about below 70.50, which has worked well enough. Yesterday, in fact, we had a chance to sell at 70.50. We've been down close to 70.00. This does look negative. I know that the dollar index could reverse, so we've got to bear that in mind. This chart looks negative. We'd have to get back above 70. I'd say we'd have to get back above 70.50 by the Friday close for me to not be so bearish. There's not a lot to say in the New Zealand dollar. We broke the trend line, which was negative, and now we've hit the next target, the 200-day moving average, which is held. I don't know what to say about this. If we break the 200-day moving average, if we get below sort of 67.40, then obviously there's further downside. The 100-day moving average at 67.75 seems to be holding as resistance. If we get back above there, then we've got the trend line at 68.05. So those are the levels to watch, those are the levels to trade. I've no idea which direction it'll go in now. Tuesday I suggested we should buy the yen. It looked like it was going stronger against most of the currency pairs, and that certainly has worked really, really well. So I just hope you manage to buy the yen around Tuesday and run this move lower. Yesterday a really nice move lower as the dollar yen hit 111.00. So it's just testing this trend line. Of course, that's going to be key now. Do we hold the trend line, or do we break below 110? Yeah, 110. A break below 110.90 should set us off on the next leg lower, and we could be hitting 110.40, 110.30. If we hold the trend line, then obviously this channel will remain relevant, and we'll head back up towards 111.35.40 to start with. Euro yen, I was looking for that to drop nicely. We've now broken below this trend line that you see here going back a couple of months, so that's also negative. There's no reason to buy this. If you're holding shorts, it looks good. Another beautiful call for a stronger yen was against the Canadian dollar. We sold off to this lower trend line down here, again a 2-month trend line. That was broken, and we've just continued lower. So again, outlook remains negative for the Canadian dollar versus the yen. The yen looks strong. It was definitely the right idea to be buying into the yen earlier in the week. Gold, unfortunately, we didn't get a chance to buy in the mid 1270 area. These three dojis with dojis stroke hammers with the longer candle wicks down there signaled that the market would at least just trade sideways, and that the downside might be exhausted, and now we seem to be reacting to that by going higher. I don't regret not buying it there. It wasn't a safe level to buy. I needed to buy it in the mid 1270 area so that the risk reward is low, and we had a stop below 1265. Sometimes you just have to sit and wait, and sometimes dollar versus the Norwegian kroner, I was too cautious. When I saw this upper shadow on this candle, upper wick, I thought best to get out, and I was completely wrong, because of course we rocketed through it. I wasn't monitoring the market, I was busy in meetings, so I didn't get a chance to buy on the break. I hope you did, because that was always the game plan, to see if we broke above here. And in the beginning of the week I thought we would, and then I was uncertain by the time Wednesday came. But real strong move now, so if you manage to capitalize on that, if you manage to jump in, well done, really looks good. We're now approaching what was the ultimate target up there at the December high, which will now be key. Now, just like in the dollar index chart, there's a lot going on here on the weekly chart, going back to the peak at the end of 2016, beginning of 2017, and the peak again at the end of 2018, beginning of 2019. You join that trend line up, and we've got a strong resistance up here at around the 880-85 area. If you're long, it's definitely worth getting out of there. It's not worth holding it and seeing if we break above there. Let's just wait and see where the weekly closes. Do we reject it, or do we close above it on Friday and then give us a buy signal for the start of next week? Yeah, as I say, take some profit and wait. Swedish krona, I've been bullish of this after we broke out of this triangle pattern. It was a choppy old market through February. It wasn't easy to hold along, but it's only now that it's performing. If you managed to hold on to the long, I didn't. This is looking good now. We've broken above the February high, very clearly above the February high, of course. So that looks good on the daily chart. But on the weekly chart, we've got to be careful because we've got this trend line going back to the peak of 2009, joining the peak of 2016. So we're just tackling it now. So we're in a similar situation as we are with the dollar against the Norwegian krona and the dollar index, all testing important levels. It really is key. It's good that it's a Friday, and it's good that we've got non-farm payroll out, because that should give us the direction for next week. It all depends whether we reject the trend line or we close the week above it. Selling the euro up here against the New Zealand dollar was a nice little trade again this week. If you did that end of Wednesday, beginning of Thursday, that was a beauty. ECB helping me out nicely with a weaker euro against the dollar, against the New Zealand dollar, and also against the Japanese yen. So hopefully you got on at least one of those trades. The Canadian dollar, we were looking for further gains this week, and we certainly got them. Real nice. I was looking for the break initially above this trend line, which we got. Then I was looking for the break above this peak here at 133.40, and then I was looking for a break above this peak at 133.75. We got the breaks. We got what I wanted. We got a higher market. So if you've been running longs in the dollar against the Canadian dollar this week, you've done really nicely on that too. So all in all, I think a pretty good week. You would have only really had to have jumped onto one or two of my trade ideas to have made some significant profits and catch some of the best moves of the week. Oil, however, didn't work. I thought we had a head and shoulders topping pattern on the daily chart. Well, we still kind of have it, but we seem to be drawing out the right shoulder. So just watch. A break below 55.50 will be the sell signal, and we'll confirm that this is a head and shoulders top. But right now, I tried to preempt it. Actually, I got short around these moving averages around 56.5, and I've got stopped out of that, so it didn't work. Now we're trading back below there, which is frustrating, but I'm not going to do anything until I see us break below the 55.50 area, 55.50, 55.40 area on the hourly chart. That will give me the sell signal.